Hello students. This video lecture is an initiative taken by Shet Vidya Mandir Junior College of Commerce and Science. This video lecture is for 12th standard commerce students and
Our today's topic is retained earnings. Students, retain means to keep aside or to keep it with self. Earnings means an income or a profit for the firm. Students, business is performed with a motive to earn profits, and the profits are very fluctuate in nature. Profit is the result of the all activities performed throughout the year. At the end of the year, a firm or a business organization comes to know about its profit. It can be more or it can be less. Profits are subject to variations. Likewise, future is also subject to variation. Future is uncertain. So, to meet the future uncertainties, every business organizations they retain a part of profit or they keep aside a part of profit earned during the year. All this accumulated profit throughout the year in the number of years they are called as retained earnings. They are kept with a name like general reserve, reserve fund, profit and loss, etc. The sum total of retained earnings get accumulated over the years. The process of accumulating corporate profits and their utilization in business is called as retained earnings. Retained earnings is also an source of finance for business organization. You can say it is a cost free finance, as if the company raises capital through this source, there is no one in the market to whom the company has to pay. Every year, the company has to keep aside this part of profits. At the end of the year, when the profits are calculated, after paying the interest to debenture holders and dividend to preference share and equity shares, a part of that net profit is kept aside, and so it is called as retained earnings with the name reserve fund or general reserve. In the coming time, the company can also convert their retained profits, their retained earnings, into bonus share. We have seen bonus share in learning the features of equity shares. Bonus shares are free of cost for the equity shareholders, but bonus shares are made up of this retained earnings, this profit which is kept aside. So it is also called as capitalization of profits. The management convert their retained profits into permanent share capital by issuing bonus shares. Now let us see the determinants of retained earnings. That means the factors which affects the size of amount kept aside as a profit. Let's start with our first determinant, total earnings of the company. If the company is earning a ample profit, that means a good amount of profit, it can save more. But at the end, it depends on the attitude of the management, as the top level management decides the amount of profit to be kept aside. Our next determinant is taxation policy. Student, taxation policy of a government is very important determinant of corporate finance. If the rate of taxes are higher, then the amount of profit, the volume of profit kept aside will be low. And if the rate of government policies, the taxes rates are low, then the company can keep aside a good amount of profit. Our next determinant is dividend policy. Dividend policy is made by the board of directors. It is a policy made by the board of directors, the top level management. In the making of this policy, the board of directors decides the amount of profit to be distributed as dividend and the amount of profits to be retained to be kept aside in that year. It totally depends on the approach of the board of directors or the company. If they have a profit maximization approach, they will save a good amount of profit, or they will keep a good amount of profit aside and distribute dividend to equity shareholders at low rate. And if the directors go for wealth maximization approach, here the part of profit kept aside is low and the rate of dividend is high. Our last determinant is government control. Students, the government is a regulatory body of economic system of the country. Every company registered under Indian Companies Act 2013 has to follow the rules and regulations which are given by the Companies Act. And the Act has laid down various rules and regulations, even for retained earnings. The dividend policy of every company should be according to the rules and regulations framed by the government. Thank you.